Show me the crypto. Show me the crypto. Show me the crypto.
In a world on the brink of disruption, two men will bring you clarity by interviewing some of the most intelligent and influential names in the blockchain world. Welcome to Show Me the Crypto with your hosts, Wade Patterson and Ulf Lonergan.
Well, hi there and welcome to Show Me the Crypto. My name is Wade Patterson.
And I'm Ulf Lonergan.
We're a couple of friends from Canada who love learning about cryptocurrencies and blockchain technology, and we're happy you're along for the ride. Whether you're a crypto virgin or you know your way around the block, we hope our interviews with some of the most intelligent and influential people in the blockchain space help deliver you with value. And on this episode, we're joined by Alex Svanevik, CEO of Nansen, which is a blockchain analytics platform that analyzes more than 100 million labeled wallets and their activity on all major blockchains. Nansen recently released the 2021 State of the Crypto Industry Report, and Alex is joining us to share some of the key findings from that. Alex, welcome to Show Me the Crypto.
Thank you so much, Wade. Nice to be here.
Yeah, stoked to jump into all of the things that this report covers. But before we do that, I want to start off with your own background and intro to the crypto industry, because from what I recall in another interview, you were saying that when you first heard about Bitcoin, it was 2013 and you figured you had missed the boat. So how did you go from that to CEO of Nansen?
Yeah, I'm really sad I made that conclusion back in 2015.
You know what? You're not the only one. Most people we talked to who were exposed that early, they all thought the same thing. So it's a common thread. Yeah.
It is. And I've made worse decisions after that as well, which I can maybe talk about later. But no, effectively, I learned about Bitcoin. So I'm from Norway originally, and we have pretty well functioning financial system, banking system, like pretty stable currency, and so on. And so I think the value proposition of Bitcoin didn't really appeal to me. I didn't see the need for it because I was living in this bubble. But then basically in 2017, I learned about Ethereum. And that's really what made me excited about the blockchain and crypto space, because it's a platform. So that means you can have all this innovation happen on top of it. Whereas with Bitcoin, I felt even if blockchains and crypto is going to take off, how do you know that Bitcoin is the currency that's going to make it at the end of the day? With Ethereum, I felt like, well, this is a platform, so you can imagine someone creating something on top of it, and that's going to accrue value to the platform, right? But basically, to answer your question on kind of my background and so on, when I learned about Ethereum, I was working at Schibsted, which is a media group, European media group, as a data science manager. Before that, I was working in management consulting for a few years. My background is originally in artificial intelligence. And I've always been kind of a data person. And when I discovered Ethereum, I figured that working in the intersection of crypto and data was something that could be quite interesting. Crypto is a space that has an abundance of data. But when I joined the space, there weren't really a lot of good analytics products out there. So I felt, there's probably some value that can be created here. And one way I like to think about how we ended up with Nansen is that you have kind of two sort of outer extremes when it comes to analytics products and crypto. You had Chainalysis, which is a kind of anti-money laundering, compliance-oriented product for like banks, law enforcement, exchanges to figure out that they're not doing anything bad with crypto. But it's really expensive and it's not really geared towards the investment use case. So that was kind of one product that existed. And then you have kind of like CoinMarketCap, which was focused on, investors and traders, but it's not really high alpha. It's very high level. It's also a free product. So we figured maybe there's something in between where you can kind of take the power of on-chain data, blockchain data, and then structure it for like investment use cases. And so that you can get this kind of X-ray vision on the blockchain and understand like who's buying what, if you want to understand the liquidity situation for a token, it makes sense to look at which decentralized exchanges hold it, and which centralized exchanges hold it as well. So this was kind of the background for why we created Nansen. We had this insight that if you can take the blockchain data and you can sort of label a lot of the accounts and addresses, that's going to make all this data 100 times more useful. And you can probably leverage that when you're an investor or a trader in the crypto space.
And you mentioned, like, when you originally had this idea for Nansen, that there really wasn't anyone doing anything similar, or at least for the use case that you were hoping to provide. But as of today, I still don't know that there is something exactly like Nansen, but there are a lot of different on-chain data providers. Is it a wide market with a lot of variety as far as like the competition goes, or is it actually, quite specific what Nansen provides?
Yeah, I think the unique thing we do from a data perspective is that we enrich the on-chain data. So we don't only provide kind of vanilla on-chain data, which lets you count how many addresses hold this token, or what's the TVL of a certain project. With Nansen, you can also understand much more granularly, like who's actually owning the tokens and what type of entities are holding these assets or engaging with these assets. So the sort of enrichment of the on-chain data is what makes Nansen really powerful. And it means that you can create certain charts, tables, and do research and insights that you can't otherwise get. So if you only have the on-chain data, which in my view is kind of like a commodity asset at this point, like if you know how to do it, you can pull out on-chain data yourself. But the enrichment of the on-chain data is what makes it really, really valuable. And then the second thing is, even if you can access, in theory, the blockchain data, most people don't want to like write code and like access that data themselves in very kind of sort of manual ways, or ways that require you to know certain programming languages. With Nansen, it's kind of no code, right? You just go in and you can sort of explore the whole blockchain in real time without needing to write a single line of code. So it's a really kind of easy way to get started investigating data, although it is a pretty sophisticated and maybe even like hard to use product if you've never used it before, which is something we're trying to fix. But yeah, so those are some of the differentiators. I think the primary thing is we have data that no one else has.
Right. Well, what do you mean by data no one else has? Like, what specifically is that? Or do you just mean by the enrichment factors?
Yeah. So we have more than 100 million addresses labeled with different entity information, behavioral tags. For example, we have about 4,000 to 5,000 smart money tagged addresses that have actually, done well flipping NFTs, yield farming, trading tokens. And the only way to kind of get that direct segment of addresses and track them is by using Nansen. So, and similarly, we have by far the best coverage on which exchanges own which addresses. So if you want to understand how much Ether is held by Coinbase, if you want to understand how much Wi-Fi tokens are flowing into Binance, there's no other platform that comes close to Nansen in terms of the coverage of that.
Yeah, I mean, I'm new to Nansen and I'm not a user myself, but having read through the State of Crypto report, there's, obviously the report itself is pulling data from Nansen. And so it was interesting for me to be exposed to, these different groupings of wallets. And as you mentioned, like there's smart money, there's there's Whale, there's TradeFi, there's all these different groupings that you have. And I think as a investor in crypto, it definitely sounds like a very interesting tool to get in and sort of be able to follow, maybe not individuals. People are used to the concept of maybe following a trader, and a trader is going to put out signals, but this is much different where you can actually follow these groupings of, big smart money and things like that. So I don't know, I found that all really interesting in the report, actually, to read some of those aspects that come directly through what Nansen provides as a service. So I just wanted to mention my own kind of thoughts on.
I love it. That's great.
Awesome.
Yeah, I think also the report for us was kind of an interesting process to create, because the data in our platform is very real time. It's very much like you go in and every day you see something different. Like you log in and you see these NFT collections are now super hot. These smart contracts now have a lot of inflow of smart money capital. You know, these smart contracts are being used a lot on Ethereum, and every day it will look different, right? So the report is more about like the longer term trends throughout the whole year. So it was actually kind of an interesting exercise for us because it's a different perspective. Whereas the product itself tends to be very kind of real time, and here's what happened in the last like 5 minutes or 15 minutes. When we did the report, we had to sort of take a different perspective and think more like about the long-term trends. And I think that what came out of that is also the realization that we should have more of these long-term trends in the platform, because many people, especially like more institutional investors, venture firms, they want to see the longer term trends, right? They don't really care about what's the hottest NFT in the last 15 minutes. So you need to have both perspectives, the longer term and like the short term real time stuff.
Yeah, so let's dive right into the 63-page State of the Crypto Industry report, because it is fascinating. There's so many different kind of categories that are covered. But before we dive into the specifics, thinking of 2021, like to me, I've been keeping an eye on the space since mid-2016, and 2021 for me was one of the craziest years. Like NFTs, sure, some people kind of knew about them before 2021, but not that many people. And then it just exploded to be this household acronym that everyone was talking about. Same with things like DAOs and everything along those lines. So you personally, looking back at 2021, what surprised you most about that year in crypto?
I totally agree with you. NFTs definitely is the big thing, right? So it's actually really interesting that they've been around for many years. But for some reason, in 2017, people just kind of that's when they realized that these things are really interesting. And I don't know. I think there are a few different factors here. I do think that 2020 was kind of an enabler for 2021. So 2020 was like the year of DeFi and yield farming, and a lot of people made a lot of money in 2020. And I do think that this probably kickstarted some of the NFT craze in 2021, because they effectively had so much money that they didn't know what to do with it. And so they started investing in things like CryptoPunks, right, which drove the price up for CryptoPunks. And then that sort of triggered, I think, a few other NFT collections that were inspired by CryptoPunks, like hash masks, which were pretty early in 2021. And then later on, Bored Apes, which was, very similar to hash masks, right? And then you had this kind of Cambrian explosion of NFT projects where they're all learning from each other. They're kind of copying the minting process, but then there's like a slight mutation on how they do it. So you get this kind of like very almost like biological or evolutionary process of NFT projects being minted and created. So I think that was that's how I think of the causal mechanism that kind of set up the NFT space for success. And then a few people outside of the crypto bubble started engaging with it. And I do think that there were a few other factors that played in, like the play to earn wave with Axie Infinity made many people who would otherwise never become like interested in crypto suddenly set up a wallet and start earning crypto instead of the standard path for the last 10 years, which has been to buy crypto, right? Suddenly there was a way to get onboarded to the crypto ecosystem by earning it instead. And so, and of course, Axie Infinity is based on NFTs as well, right? So then you have like millions of people interacting with Axie, and that caused the price of the AXS token to spike, and a lot of media attention gathered around that. Then you had like celebrities getting interested in like Bored Apes. So you had like a kind of a perfect storm of all these different factors that happened. And I think that it sort of clicked for people too. There's of course like COVID and the fact that people were sitting at home, and the whole like world, the digital world and the metaverse became much more real for people, because you're literally forced to sit in front of your computer all day instead of going out to parties, clubs or whatnot. So there's like all these different factors that just kind of culminated in this NFT craze. But what I would say is that, and like we had, tens of billions of dollars in trading volume for NFTs, which is huge. I mean, it was like peanuts before that. And I think that trend is just going to increase this year. So that's kind of how I look at the NFT space. And it's cool that we've only scratched the surface in terms of NFT applications, because most of these NFTs are still just like profile pics and like art, which is cool, but it's still a very, very small part of what you could imagine doing with NFTs. It seems obvious to me that NFTs could be used to reach certain audiences, and like instead of having like targeted ads from Web 2, what if you just gave like discounts and benefits to Bored Ape holders? And that's like a great way to attract Bored Ape holders to your product, right? It's kind of a no-brainer for us as a company to do that with Nansen. Like we should give discounts to people who own certain NFTs because they're right in the target group of those people we want to attract. So anyway, so there's like, I would say there was this perfect storm of factors that created the NFT boom. And then, many people thought that NFTs are dead. This is the top every month of 2021. And it just kept going higher and it kept getting crazier. And, actually January of this year, I think we've had more trading volume of NFTs than all of history before it. So the trend has just kind of continued. And you never know when this podcast goes live if the market is up or down. But I think the thing that we've seen over and over again is that NFTs continue to surprise people by how big the interest and enthusiasm is around them.
Well, I want to follow up on that because you did say, 2022 is looking like it's going to continue to go that way. But you're right. Maybe it will, but it does seem like there's a lot of people out there that have this feeling of, 99% of projects are probably going to fail, kind of like the early .com days is what we're experiencing with NFTs. But then also, even if there's this kind of massive crash, a lot of even the blue chip projects will go down, but eventually they'll kind of rise from the ashes. But in terms of, with Nansen, it's analyzing data as well. So kind of what are your feelings? Like, do you have an opinion on what you think might happen there?
I do think that people should be prepared that the vast majority of NFT projects are going to be worth zero in a few years. That's just the nature of these like highly speculative markets. So people should definitely be prepared for that. But I do think it's in a way it's a bit. It's tempting to draw the analogy to ICOs, but they're also a bit different, right? Like ICOs had this kind of insane boil the ocean visions where, we're going to make the next decentralized Uber or Airbnb or Google or whatever it is. But then the infrastructure was just not ready for it. With NFTs, it's kind of like these are pretty much more, they're a lot more straightforward. It's just like they're JPEGs. Like, what do you expect? I mean, that's like, we're not saying that Bored Apes is going to change the world necessarily. We're just saying that they're fun and people are interested in them, like the brand. They do have a lot of intrinsically powerful attributes. For example, if I compare a Bored Ape to a Gucci bag, the secondary market for Bored Apes is actually much better because they have infinite durability. Like there's no, the bags might get scratched or whatever, right? They have much higher liquidity. So it's much easier to trade them and find a buyer on the other side of the world at any time. It's a lot easier to perform the transaction. If you sold a Gucci bag, online or whatever, you'd have to mail it and so on. With the Bored Ape, you can just sell it in a few seconds. So they have a lot of like intrinsically valuable properties if you compare them to like luxury goods or collectibles in the real world. So I think like these properties will probably mean that NFTs are here to stay as a category. Like I don't think that NFTs are going away. I think NFTs are going to be much, much bigger in a few years than what they are today. But the devil is in the details, right? And you can't just go out and buy like any random NFT collection, expect it to be worth 100x in the next year or two. And so you've kind of seen that. What I wouldn't say that there are any very clear patterns on what characterizes like a successful NFT collection from the not so successful ones. Definitely one aspect is who is owning the NFTs. That's probably, if there's one thing you can boil it down to, that's probably it, right? So if Pranksy owns an NFT collection, that tends to be a pretty positive signal, not always. If Dingaling, who's one of the top Bored Ape holders, would own an NFT collection, that's something that people want to know about, and they tend to sort of copy trade them. So that's maybe right now like the main thing that people look at in terms of like who is actually buying these different NFT collections. And of course, that's one of the main things that you can find out with Nansen as well, which is probably why our platform is quite popular. If you look at more like fundamentals going forward, I do think that it makes a lot of sense for NFT collections to create some form of utility, either themselves through things like games or swag or whatever it is that you could get from owning an NFT. But I think the more scalable thing is that if you can incentivize others to create stuff for the community members of an NFT collection, that's when it gets really powerful. And this kind of goes into this theme of sort of permissionless innovation in crypto. No one needs to ask the Bored Ape team if they are allowed to make an application where you can bring in your Bored Ape and start using it, right? People can just do that, and then you can bring your NFTs into that game, and now you have some utility for the Bored Apes. But the game developers also now attracted a bunch of users organically, right? So I think there's a lot of stuff that's going to happen in that space where, especially around blockchain gaming, people are going to be able to bring these assets with them into different games, into the metaverse. And that's going to drive a lot of this fundamental utility. I don't know how long it will take before that materializes. I know of different projects, of course, that are working on things like this. But that's kind of one of the things I would predict for the next few years, that I don't think it's going to be enough to only have like profile pics and that's it. There's going to be a lot of applications for NFTs, and also the existing NFTs will have to get utility in different ways. And it's not just about what these projects can make themselves. It's also about what other projects outside of them can create for the holders, which they're incentivized to do, because it gives you, thousands of users from day one, potentially, if you do it well. So yeah, it's hard to predict the future, but I do think that 100%, or 100% you never know, but 99% sure that NFTs are here to stay. And then it's more about looking into what characterizes the good projects, who's backing them, and what's going to be the utility that drives usage of NFTs.
Ulf, do you realize our audience has been either watching or listening to this episode for 20 minutes?
20 minutes? No, they should probably subscribe.
Yeah, they should subscribe. And if you're watching on YouTube, make sure you comment and turn on notifications. And if you're listening to this podcast, especially if you're on Apple Podcasts, leave us a rating and a review.
We're also on Twitter, Instagram, and even TikTok. So go check out the episode description. You can find all that information below. And we have an update on the NFT, don't we?
That's right. We didn't previously mention this, but this NFT for our OG supporter is a one of one. There will only be one of this kind ever minted, and we have a few surprises for the person who purchases it. The link is in the episode description.
And back to the episode. All right, we've talked a lot about NFTs, and we've got a lot of other stuff to talk about. But before we do, because two parts of the report were NFTs and also play to earn gaming, and we just talked a lot about NFTs primarily and a little bit about play to earn gaming. And what I just want to go back to is, for a lot of the comments you made about maybe your predictions in regards to NFTs and where they're going to go, and are they going to continue to grow? And when we talk about projects going to zero, are you primarily referring to the NFT collectible type projects, or are you also including play to earn gaming NFTs in that? And does Nansen do that as far as like the reports go? Are they separate, or how does it differentiate, different types of NFTs?
Mostly we focus on collectibles. So if you have 10,000 items in a collection, that's the stuff that is kind of the bread and butter of the NFT dashboards in Nansen right now. We do have some data on play to earn as well. Specifically, we have data on Ronin, which is Axie Infinity's own blockchain, in terms of users, marketplace fees, breeding fees, and so on. And then we have data on Axie Infinity specifically that we've created. We definitely want to continue to track the play to earn sector beyond just collectibles and NFT collections. But it's tricky because you need to also have in-game data. And so this is kind of an area where we don't currently have support for, say, like if you wanted to pull out the data from the gameplay from Axie, like if you wanted to look into like the Unity analytics or something, we don't have that now, but we are doing some interesting things in that area, even if we don't have it available in the platform right now. But you need to have those two things. You need the blockchain data where you see kind of the assets moving around and also between the different games and ecosystems. And then you need to have the in-game data. So I think there's going to be not just Nansen, but there's going to be other platforms covering the blockchain gaming sector. Right now, you can use Nansen for the NFT collections themselves, but you should expect to see more support for other types of NFTs, other types of blockchain-based gaming analytics as well.
And so just a quick follow-up on that then, to go back to the prediction space, NFTs, as far as the collectibles, it seems like the thoughts there from your side are that they're still going to grow, but many of those projects are going to crash. What about when it comes to play to earn gaming? Do you feel like that hasn't yet actually had its time to really blow up, or do you think that's already started, and do you think that's going to continue?
I think Axie Infinity basically invented this category, right? And many people doubted Axie Infinity. I mean, back in, I think, early 2020 when they did their first seed round, like I think they even struggled to close the round, and a few investors, I think, even backed out of that round, which they're probably very sad about today. So I think they invented that category. They have proven that you can get to millions of players, using without like paying for marketing in a traditional way. Because in a way, play to earn is a form of marketing expense, right? But I would argue that it's maybe people would say the exact opposite, but I think it's a more sustainable form of marketing because you're giving ownership to the players, which you don't do in traditional gaming. In traditional gaming, maybe you're paying like Facebook or Google or other like mobile gaming platforms to like for ads to get people into the ecosystem. But how sticky is that, right? Whereas if you're giving people a piece of the actual ecosystem that they own and they're incentivized to help grow, that seems to me like it's a more sustainable form of growing a new game or like a metaverse universe. So I think that Axie Infinity, of course, it's still pretty early, but they've proven many of the skeptics wrong, at least in the initial phase. Now, the next question is, I guess, like what's going to happen with all of these like Axie clones, or not Axie clones, but kind of derivatives or mutations of Axie. And I think some of them are likely going to be really big, maybe even bigger than Axie itself, because there's still a lot of improvements that you can do on the gaming side of Axie, right? Like, I think, I'm an Axie fan myself, but I wouldn't claim that the Axie game is the best video game I've ever played in my life. And so I think there's still room for improvement there. That can also be done within the Axie ecosystem, because you can have different Axie games where you can bring in your NFTs and play that. But I do think that the fundamental tokenomics of Axie are really, really interesting and very well designed together with Delphi Digital, who helped advise Axie early on. So I think many people will take the tokenomics and then they will create completely different games that maybe are more engaging. And so, but then, so I think that's promising, and I can see games even surpassing Axie in terms of engagement, number of players, total value traded, trading fees, and so on. But at the same time, it's really hard to make games. It's kind of like, I often think of it as like, if you would give someone like a video camera and try to make like a Hollywood movie, I mean, the result's not going to be very good, right? So it's similar with gaming. People definitely underestimate the skill and like the manpower and the experience you need to build truly world-class engaging games. And so if you see projects out there raising money and they've like never done gaming before, and they're kind of like, we're going to make the best game ever created. A lot of those projects, start feeling a bit more like the ICO wave of 2017, and they're going to leave a lot of people disappointed because you can't just like buy yourself to making a Hollywood movie. And it's the same thing with, you can't just buy yourself to making a world-class game. And so I would again, like expect that the vast majority of play-to-earn games will fail and probably go to zero. But then I do think that some of them are going to become really big, to the point where not just the benchmark isn't Axie Infinity, the benchmark will be like Fortnite and like the biggest gaming series in the world. And it seems like a no-brainer to me that in a few years, the biggest games will involve some form of digital assets that the players themselves own and can move around in these ecosystems. So that's how I think about play to earn.
Switching gears here, what's happening when it comes to layer 1 and layer 2 activity? Because we've talked on a couple other interviews about the blockchain trilemma, where you're trying to balance speed, you're trying to balance security and decentralization. What did 2020 look like in terms of where actual users were, like which blockchains were being used?
Yeah. So I was in the camp of like, Ethereum is going to take over the world. It's not going to be any other chain for many years. And then I feel like in 2020, I started doubting it a bit because of Binance Smart Chain. Not because I was necessarily a big fan of Binance Smart Chain, but just because it seemed to me like people are comfortable with different trade-offs when it comes to decentralization and speed and security. And so Binance Smart Chain is one of the chains that has had a lot of activity. And there are different ways you can sort of measure success here. One thing is in just number of addresses that are active on the network, and number of transactions. So looking at 2021, I mean, there are days when you have, I'm just looking at the data in front of me now, like 16 million transactions on BSC, right? Which is huge. And in terms of number of users and number of addresses, we're talking about millions of active addresses, often in just one day, right? So the Binance Smart Chain was probably, in a way, the chain that sort of proved that you can create these EVM chains, Ethereum virtual machine based chains, and you can actually get traction, and you can get developers to, either clone or fork or create new applications on these other EVM chains. And then there are other EV or EVM sort of oriented chains like Avalanche that have grown a lot in 2021 as well, especially towards the end, where there's been kind of a linear growth in activity just since mid 2021. And Avalanche is interesting because it has these like subnets, which could be very powerful for things like blockchain-based gaming. And they've done optimizations where you don't have to spend as much gas as you do on Ethereum. And so I think with Ethereum, there was so much activity that it kind of got congested and very expensive to use. And the demand kind of like overflowed to other chains, including Binance Smart Chain, Avalanche, and so on. If I introduce people to blockchains now, it's hard for me to recommend them to go to Ethereum, where they have to spend like $50 to make one transaction. You'd probably guide them towards something like Avalanche instead. And I say this as like an Ethereum fan, like a huge Ethereum fan and a huge Ethereum bull, but it's kind of hard to justify these transaction costs, especially if you're not coming in with like millions of dollars on day one, which most people don't. So that's like the different alternative chains to Ethereum. And there's also Solana and Terra, which have a lot of organic activity. They're not EVM based, but they've had a lot of growth in terms of developer activity, user activity. And we're going to be adding support for those chains too in Nansen very soon. So that's kind of like the L1 part. And then L2, you have things like Arbitrum, you have Optimism, and you also have, you can debate if like Polygon is a side chain or if it's an L2. I'm not going to go into that debate, but there's definitely activity there as well. As a user, it starts to feel like, what's the difference between an L2 and just a parallel EVM chain? Like you're just switching the network to Avalanche or to Polygon and you're bridging. So it starts feeling very similar, even if the security and all that stuff is quite different. So yeah, I mean, I think that the general theme has been that 2021 definitely is the year that the world became multi-chain. And it started towards the end of 2020, but it sort of solidified that trend in 2021. And where many people expected Ethereum to just be the king forever, and you would only have the L2s on top of Ethereum, I think we've kind of gotten enough traction on other L1s that, it's unlikely that Ethereum will just come in and sort of eat up the whole market. I think there's going to be room for different chains that have different trade-offs, just like you have different operating systems, you have different browsers, you have different video gaming consoles, and so on.
There was a whole section in the report around stablecoins. Can you tell us a little bit about what the findings were there around the most popular stablecoin and just some of the interesting information that came out of that?
Yeah, one of the main things that happened in 2021 was that USDC flipped Tether, or it actually technically only flipped it in January 2022, but it got really, really close towards the end of the year. And so that's actually pretty huge because Tether has been this like monolithic custodial stablecoin for a long time. And now USDC is like an actual contender, which I think the good thing for those of us who kind of want decentralization, if you can't have decentralized stablecoins or non-custodial stablecoins be the leaders, at the very least, it's good to have multiple different custodial stablecoins. That makes things a little bit more decentralized in a way. So that was a huge thing that happened. Another thing that you could see, I mean, it's related to gas costs on Ethereum, is that generally you had an increase in large transactions of stablecoins. So in 2018, 2019, you could make like $10 transactions between two addresses, and you could sort of use it to send dollars to your friends or whatever in small amounts to pay for like to split the bill on a restaurant or whatever. That use case no longer makes sense with Ethereum because the gas costs are too high. And so instead, it seems like the product market fit for stablecoins on Ethereum is becoming more about like investors and like angel investors, of course, trading funds, hedge funds, market makers, and settlement between sort of stablecoin issuers and exchanges, instead of like normal people using stablecoins directly on Ethereum. That seems to be a pretty clear trend where most of the transactions are actually pretty large in like hundreds of thousands of dollars or millions or more in individual transactions. So that was another trend that we've seen just solidify itself over 2021.
Interesting. And there's another section on DAOs. And this is something we've had a few guests specifically join us to talk about DAOs. I struggle sometimes to fully wrap my head around like when is it key to use a DAO? Like, at first, what is a DAO? What is the actual definition? Which we kind of got multiple definitions on what a DAO is specifically. But what did the report find with regards to DAOs in 2021 and maybe what you see going into the future?
Yeah, I think we only almost had like a teaser on DAOs in the report. And we look at, for example, friends with benefits as an example.
Right.
And so I would say in general, DAOs are one type of organization. In fact, it's not one type. It's kind of like a space of different types of organizations. And so once again, we go back to like the DeFi wave of 2020. But when you have all these like DeFi protocols that grow very fast and they get a treasury, you need some way to manage the treasury. And so the difference in 2021 versus say 2017 or 2018, when you had also DAO platforms like Aragon, the difference back then was that it was kind of like it was almost like a solution looking for a problem. Like here, DAOs are cool, but like what exactly do we use them for? After the DeFi wave in 2020, you now have a lot of decentralized projects that have to manage a treasury. They have to set like parameters on these different protocols. And there's literally no other way to do it than to have a DAO. Like you can't have a company, like no one's going to use, well, okay, that's not true. A lot of people would feel hesitant about using products where the parameters are like decided by just one company. In fact, people use these types of products all the time, like Coinbase and Binance and whatnot. So that's why I'm moderating that statement. But people who are believers of like decentralized protocols and so on, they feel better about some kind of decentralized governance process where you decide how parameters are changed, so you don't get like rugged on your fees or whatever it is from one day to the next. And so really like that boom in 2020 kind of created the need for DAOs. So you need to have like DAOs that can actually manage treasuries and decide parameters. And then you have like a lot of other types of DAOs that popped up around NFTs. For example, Pleaser DAO, which I was one of the early members of, and I'm still cool. A member there. Yeah, so that's like a completely different thing, right? Where it's kind of, can we just like pool together funds and get like accomplish bigger things than what we could do individually? That's kind of the basic premise, right? Where we wanted to buy the Uniswap V3 NFT that was created by People Pleaser. And so we thought, like I don't have enough money to buy this thing, right? And like you don't, but what if we get together in a group and we try to just pool the funds? And that's how Pleaser DAO was started. And then you have a few other NFT collecting DAOs like that popped up in 2021. And that's like a very different thing than the treasury management and parameter setting of DeFi protocols. But we still call both of them DAOs, right? Mm-hmm. So, and Friends with Benefits maybe is more, in that category than it is like managing a DeFi protocol. So I think when we say DAOs, certainly there's actually a big space of different types of organizations. But the cool thing is that you couldn't really create organizations like this before. And so with blockchains, it's possible to experiment a lot more with how people organize themselves and how you manage capital and allocate capital in new ways, which is pretty fun and exciting. So yeah, that's kind of how I think about DAOs. I think that the two main categories are like managing treasuries, and it comes from a direct need. Like there's no way around it. And then there's the more kind of experimental, fun kind of like people grouping together on the internet, getting stuff done, which Pleaser DAO is one example of.
Yeah, totally. In terms of the protocols that are being used the most, like kind of using the most gas on Ethereum, Uniswap, I think, is what the report identified was number one. But how close was Opensea to taking over that crown? Because we just talked about how massive NFTs were. Did Opensea ever overtake Uniswap there?
It did, yeah. I think in August, September, when Opensea really started taking off in trading volume, it flipped Uniswap for the first time, I think. and it was the number one used application on Ethereum in terms of transaction fees for a while. Then Uniswap flipped it back, and actually in January this year, OpenSea overtook Uniswap once again.
Wow.
And that's actually despite LuxRare, which is an OpenSea competitor, launching in January as well.
Right.
So that's pretty cool to see. And I recently also noted that, of course, OpenSea is the big one for NFTs, but there are a few other big gas consumers on Ethereum for NFTs, such as Gem and Genie, which are aggregators, and they allow you to execute NFT trades in a more intelligent manner across different marketplaces. LuxRare, that I just mentioned, has been one of the top gas consumers at the beginning of this year. So it seems like, of course, OpenSea is the big one, but there are a few other NFT platforms that are popping up on the radar now in terms of usage on Ethereum.
How much did that have to do with the LuxRare airdrop, though, versus people organically going there, do you think?
Oh, I mean, it's no secret that most of the trading activity on LuxRare is because of the incentives that are being given out to the traders. So there's a lot of wash trading, which we had to deal with in our data, right? Because it sort of pollutes a lot of the signal. So we've rolled out a wash trading filter on Nansen because of that, which makes it easier to exclude all of that activity and surface the actual organic trading instead.
I think one of the only areas we haven't talked about that's we're not in detail, that's covered in the report, is the DeFi sector. Probably because it was arguably the least interesting in 2021. 2020 was really its big year where there was it had a lot of popularity, and maybe NFTs and DAOs stole the show here in 2021. But I just wondered your take on DeFi in 2021, because looking at some of the data in the report, it looked like all the big DeFi names that we know of have kind of like really gone downhill in their transaction volume. And I don't know if that's because there's more DeFi players in the space now, or if it's just a lack of usage. So I wanted to get your thoughts on that.
Yeah, I think you pointed, or you sort of alluded to it there at the end. I think it's a combination of more DeFi products that exist out there that are competing with each other. Whereas in 2020, you had a handful of DeFi protocols and then it sort of exploded. So more products is one thing. The other thing is actually multi-chain. So if you have, a fork of some DeFi protocol on another chain, it sort of splits the whole liquidity and the usage across different chains, across different protocols.
Right.
And so I think that's one of the reasons you see kind of like sort of bad looking metrics on individual projects. I think if we aggregate it, it would be interesting to see that like at an even more like higher kind of bird's eye view across chains, across protocols. I think if you look at TVL, that's still been going up, generally speaking. And so that's a pretty good way to think about what's happening. But it does raise the question, how much of a moat do these different DeFi products actually have, right? And so I think that's still an open question where you can just create, you can fork another project. You can even do like a vampire attack that SushiSwap did with Uniswap. And by the way, SushiSwap is still around, right? Doing a lot of volume. So I think many people just expected that, okay, this is going to work in the short term, but it's going to disappear. But it's still one of the top applications in crypto. So it's kind of interesting to reflect on how strong is the moat of these different projects. So the sort of counterpoint to SushiSwap is that Uniswap is still the number one application. So it also didn't kind of like take down Uniswap, right?
Right.
So anyway, it's I think what you pointed out there at the end, we have a lot more applications. We also have multi-chain. That fragments the space much more. But in total, I think DeFi is definitely still growing.
All right, Alex. So we're almost at the last segment of our interview, which is the same three questions that we ask every single guest. So we'll get there in 1 second. But before we do, I want to go back to something you mentioned early. And you said that sleeping on Bitcoin in 2013 wasn't the biggest mistake that you made. Can you talk quickly about what was a bigger mistake than that?
Yeah, the biggest one was definitely selling my Bored Apes.
Ooh.
Yeah. and it's
Board
pretty
apes,
hilarious.
plural.
Yeah, plural.
Oh yeah, like 40 of them or something like that. It was like,
Oh,
yeah.
God.
So they would have been worth like $10 million at this point. And it's pretty hilarious because if you go back and look at like the Nansen YouTube, we do these like office hours. Every week we have like a 1 hour session where we poke around in Nansen. And I think me and myself and Daniel, one of the team members at Nansen, we were looking at Bored Apes and we were talking about how you could like flip them. But the price then was, maybe like 1 Ether or something like that, which is ridiculous in hindsight. But of course, you never know if you mint something for 0.08 Ether and you sell them for 10x, you think that's like amazing.
Yeah.
If you sell it for 100x, you think that's amazing, but then it turns out it goes even higher, right?
Yeah.
So that's probably the big one. The other big one is I also bought Unisocks, which is the socks of Uniswap. This was like a much smaller thing, but I remember buying them for like $20. And then I flipped them for $60, and I thought that was like pretty funny. And they went to like $160,000 or something.
Oh my God.
So that's another one. Yeah.
Wow.
Do you have any Bored Apes left?
I don't actually know.
Oh no.
I didn't delist them. That's the stupid thing, because I was like, oh yeah, if someone's gonna pay me 11 ETH for this Bored Ape, then that's fine. And then it really started heating up, and so I just didn't delist them, and they got scooped up, all of them, which is embarrassing to be honest. But yeah, that's how it is.
Man. Lesson learned. Hey, who knows? Maybe a new NFT you bought since then is gonna do the same thing, and you'll hold on to it this time. But
yeah.
Alex, like I said, this interview has been fantastic. We appreciate this report. We appreciate you dissecting it for us. Very quickly, we're going to jump into the final section, which is a segment we call You Had Me at Crypto. Ulf's going to ask you those rapid fire questions.
All right, Alex, you ready for it?
I'm ready.
Okay, the first question. Who is your favorite person to follow in the crypto space?
First one that comes to mind is probably Banteg at Yearn Finance. Very sharp guy. Has done a lot of great stuff for the crypto space, not just with Yearn, but probably the one that comes to mind first. Yeah.
Cool. Second question. What will the price of Bitcoin be 10 years from now?
Man, how much is the dollar going to depreciate?
That's
another way to
into
put
the
it.
question.
Yeah. No, it's super hard to say. $500,000.
All right.
That's probably on the low end, to be honest. But yeah, okay. I'll stick with it.
It's around average from what we've heard. Maybe slightly lower than average, but $1 million.
I think $1 million really is probably the average. Like that's what most people say, but you'd be surprised. We also get a lot lower than 500,000. So,
okay.
Yeah.
I'm going to stick to that. Yeah.
All right. Third question. What is the most underrated coin or project in all of crypto?
No investment advice, right? This is for informational purposes only.
That's right.
Of course. And you also can't answer Nansen.
We also don't have a coin, just to be super clear.
Or project, though.
Or project.
Space, yeah.
Yeah. We do have some people impersonating Nansen coins. So I just wanted to point that out so no one buys it by accident. Yeah. Underrated projects. Probably I would say Wallet Connect. That's and full disclosure, I am an investor. But I think Wallet Connect is such a much better way to use dApps on like connecting with your wallet. Like MetaMask is cool. I don't think MetaMask is the end state for how you interact with your wallet. And Wallet Connect just seems like it's like the next version of it, where you can obviously have a mobile wallet, you can scan a QR code and you have a connection. You have the security from like the private key on your phone, and then you can interact with it on your desktop. Yeah, I really like Wallet Connect. I think it's a great product.
Awesome. Good answer. Well, thank you so much, Alex, for appearing on this episode of Show Me the Crypto.
Thank you so much for having me.
Thank you for listening to Show Me the Crypto. Please make sure to subscribe as well as rate and review this podcast.